world trade war has begun. While Donald Trump was campaigning to become the next president of the United States, he talked a lot about the idea of implementing tariffs to shift the United States from being the world consumer into a world producer. And he was not joking around. In the first couple of weeks under this new Trump administration, we have seen them look to impose tariffs on Canada, Mexico, and additional tariffs on China. These are the three largest trade partners with the US, and if these tariffs do go into effect, it is going to have a huge impact on the economy here in the States and the whole global economy. Now, we just got news that the tariffs on Mexico and Canada have been suspended for 30 days, so we're going to get into the state of those tariffs as well as the state of the additional tariffs on China. And we're also just going to talk about some of the short-term impacts of these tariffs in this video. Before we do get into it, please make sure to like the video and also subscribe to the YouTube. Really appreciate your support. I'm also going to put a QR code for a Bitcoin tip down below. If you want to support the channel, feel free to leave me a little Bitcoin tip. Now let's get into it. Last week, the US announced that they were placing a 25% tariff on Canada and Mexico, and they were placing an additional 10% tariff on China. And things have gotten pretty interesting since then. Over the weekend, we saw a huge crypto crash. We saw Bitcoin drop down to around 90K. We saw some of these other cryptocurrencies dropping 30%, some even more. And I was expecting that we were going to see a big sell-off in the stock market on Monday. Now, when the stock market opened, we did see stocks fall pretty sharply, but they rebounded throughout the day. And part of the reason why stocks probably rebounded is because these tariffs have been suspended on Canada and Mexico. Over the weekend, after we got news of this announcement, Canada, Mexico, and China all basically threatened the United States with retaliatory tariffs. Canada threatened a 25% limited tariff, so a tariff on certain goods and services. Mexico didn't announce the details of their retaliatory tariff, but they said that they would retaliate with tariffs. And China announced limited tariffs on the US earlier this week to clap back for that 10% additional tariff. So China announced a 15% levy on coal and liquid natural gas, as well as a 10% levy on crude oil, farm equipment, and select vehicles. China also announced that they are going to be implementing export controls on certain metals being sent to the United States, like tungsten. So the world is not very happy with this new US tariffs idea, and that's because the world has been producing products and services for the United States for many decades now. And countries like China, Canada, Mexico are used to the United States buying their products and services. And now the US is looking to basically change the world order, and the US wants to be the seller now. They want to be selling to these other countries. If we look at some numbers, trade accounts for 67% of Canada's GDP, 73% of Mexico's GDP, 37% of China's GDP, and only 24% of the United States GDP. And these numbers are from the White House, so I'm going to hope and assume that they are correct. But when we look at these other countries, their whole business is exporting to the United States. And with the US looking to put these heavy tariffs on these countries, it's really going to impact their business. It's a huge threat to their business of selling to the US. So I can understand why Canada, Mexico, and China are not happy about this. As I mentioned earlier, the 25% tariffs on Canada and Mexico have been suspended for 30 days. The US spoke with both countries and they came to an agreement. The agreement is that Canada and Mexico will provide more support along the northern and southern borders of the United States in exchange for a suspension of the tariffs and maybe further negotiations of the tariffs. So we will see what happens in 30 days from now. If these 25% tariffs go into effect, if these tariffs are possibly lowered, I do think that the tariffs are a little bit high. And when we consider some of the stuff we saw in the US economy last year, signs of weakening with unemployment rising, layoffs rising, bankruptcies rising, I do think that a very intense tariff plan could lead us into a recession, and it's something that the United States maybe needs to think about the severity of these tariffs and if the damage that it could do in the short term could potentially outweigh some of the benefits that you may get in the long term. But looking back to this agreement, Mexico agreed to reinforce the border with 10,000 National Guard members to prevent drug trafficking and illegal immigration, and Canada agreed to deploy personnel and more technology at the northern border. Now, if we do see these 25% tariffs on Canada and Mexico go into effect in a month from now, this is going to have a pretty significant impact on prices. We already have that 10% additional tariff on China, which I believe is a done deal. And like I mentioned earlier, these are the three largest trade partners of the United States. So we can expect a lot of different products to see a price hike. We can think of products like produce. The US imports a lot of produce from Mexico, like avocados, tomatoes. Actually, I have a cool visual here which shows the US avocado imports over the past couple of decades. And as you can see, the US has become very reliant upon Mexico for produce like avocados. The US imports about 90% of their avocados from Mexico. So expect guac to be a little bit more expensive with these tariffs. We can also think of alcohol. The U.S. imports Modelo's, Pacificos, Patron, Jose Cuervo from Mexico. So alcohol prices are going to probably be going up. Sorry to break the news to you. US tech giants like Apple and Dell do a lot of their manufacturing in China. So we may see the price of electronics like smartphones rise up here in the United States. We can also think about automobiles and automobile parts. Canada and Mexico are major producers of automobile parts. So we can expect the price of these parts to go up and maybe the price of automobiles in general to go up here in the US. And we've also heard murmurs that the United States may be imposing tariffs on some of these European countries soon to come. And we know that some of the major automobile producers are over there. Companies like Volkswagen and BMW. So the US is being pretty aggressive with this whole tariff strategy. And I do think that the United States needs to be careful, because if you're imposing these high tariffs on all these different countries and then they're retaliating and imposing high tariffs on the United States, and everyone's just taxing the hell out of trade, then that's going to make trade very difficult. It's also going to make it very difficult for the US to become more of a producer if there's all these tariffs that these other countries are putting on the US. I also think the US should be careful that they don't damage their relationship with some of their key allies in Europe and in other places around the world, right? If you're just imposing tariffs on your allies, they're probably not going to take too kindly to that. Looking within the US, businesses that are reliant upon imports or exports may struggle. We can think about a business like a restaurant. Let's say this 25% tariff on Mexico goes into effect and we see the price of produce really rise up. Well, if that happens, restaurants may have to raise their prices to maintain their profit margin. And if they raise their prices, they may see less demand. And because of that, we could see restaurants close. You can also think of a business like a retail store. With this additional 10% tariff on China, maybe we see the price of clothing go up. We know that a lot of clothing is made in China, and I get that part of the idea of tariffs is that we want clothing made in the US, but we could see a lot of these retail stores go under. We can also think about the consumer. If the price of things like food is going higher and transportation, then that means that the consumer may have less extra money to spend on discretionary things or to invest into the stock market. And because of that, we could see businesses that rely upon discretionary spending struggle, or we could see less people investing into the stock market, less people have the extra money to do that. So I think that aggressive tariffs could be pretty detrimental to the economy in the short term. It could be a stagflationary catalyst if we see the prices of things going higher, and it's hurting the economy and people are getting laid off, businesses are having to cut back, and maybe people just don't have as much extra money to spend. So I do understand the idea with tariffs long term and the idea to spur production here in the United States, but I definitely think this could be detrimental to the US economy in the short term. And we could see things be pretty rough for the next couple of years if these aggressive tariffs do go into effect. The United States is a highly indebted country, and if the US is too aggressive with this tariff plan, it could send the country into a pretty severe recession. And I think the current administration really needs to think about that scenario and if that's something that they really want to try to get themselves out of. Because if we start seeing businesses go under because of these tariffs and debt collapsing, that is not going to be easy to fix. That is probably going to result in the government having to come in and provide liquidity to the markets, and that's just going to worsen the whole US fiscal situation. We can also think about other ways that countries could retaliate against these US tariffs. Could we see some of these foreign bond holders like China sell their bond holdings to retaliate against the US, which will lead to more problems for the country? If we do see these heavy tariffs go into effect, I do think that it's going to be bearish for the stock market. It's going to put pressure on the consumer with these higher prices, and it's also going to put pressure on most businesses. Now, long term, I do think that it could spur production in the country, and some businesses could benefit from these tariffs. You think about maybe an auto parts producer. If there's a high tariff on Canada and Mexico, who are a major producer of auto parts, you may see more demand. But I think for the most part, US businesses are reliant upon imports. So I do think that in the short term, we could see a significant stock market correction. So if I was heavily allocated to stocks, I'd be keeping my eyes on this tariff news, but we will see what happens. We will see if we do get that 25% tariff on Canada and Mexico, and possibly additional tariffs on some of these European countries. And we'll probably do a little update here in a couple of weeks, maybe a couple of months, and see what happens with these tariffs. That's going to wrap it up for this video. If you didn't like and subscribe, please make sure to do that now. Thanks for watching. I'll be back soon.